Thank you.
All right, let's turn now to what's happening with copper prices, because they rose to a record high last May, June, but then kind of trended lower for the rest of the year, kind of as you're seeing right there. The trade and tariff policy confusion is lingering right now. Global demand for the metal is growing, though, at the same time. So our next guest is here to give us the plan for trading copper in a more risk-managed fashion. So joining us now is Philip Streible, the Chief Market Strategist over at Blue Line Futures. And Phil, thank you very much for being here with us. We've turned to you for some of the charts and fundamental stories behind commodities, but is copper still the PhD in global economics that we've talked about over decades at this point?
Oh, I think it is, and it's one of our favorite commodities in the metals complex, and it oftentimes acts as a leading indicator for inflation and the economy. We see the decline in prices since the election and the test of long-term support as an opportunity to position for increasing multi-year demand. And, you ask why. The IMF recently put out global demand forecasts and expect the demand for copper to double over the next decade. Now, listen to your last segment. You guys were talking about AI. AI applications require more energy-intense computing, and it's expected to increase copper demand by 3.4 million tons each year, all the way up to the year 2050. So everything from electric vehicles use 4 times more copper than traditional gas vehicles, the grid and renewable technologies. We also expect constant traditional demand to pick up in 2025, construction spending, infrastructure spending, and defense. So, when you do your risk assessment, yes, the biggest headwinds are higher rates, stronger dollar, weaker China, but the biggest tailwinds could be Chinese stimulus, both for infrastructure and development. And I think that these things are going to continue to roll out through 2025.
All right, so Phil, let's take us through the trade then. That downward move, positioning for the long side, how exactly then would you trade it in that risk-managed fashion?
Yeah, so you look at seasonally, we tend to see copper prices rise to the end of about February, about last 13 out of 15 years. When you come out of winter, that's when you get the construction and the infrastructure spending pickup. So you look to buy the March micro copper at 415. You put your stop loss below this recent swing low around 395, so you're risking $500. You look to target a momentum move higher up to 460, which would be $1,125. Copper is the 4th best performing commodity year to date and is up 4% right now.
All right, so there's the trade. Risk 500 to make 1125, a little better than 2 for 1. Philip Streible, thank you very much for that copper trade. We'll see you in a bit.
Could I put in a request?